Good morning, everyone. This is Daily Trading Analysis with the weekly recap for the first week of July. July is a month of huge historical volatility and big price action to the upside. Is the month with most historical all-time highs, and we are waiting for that. Markets are pricing in a new interest rate cut in September with 72% of probability after a week of a lot of data showing economy slowdown. And more importantly than that, it's labor market slowdown. In a post-holiday session with low volume, the S&P 500 set its 34th record of the year. Non-farm payrolls increased by 206,000 in June, while job growth in the previous 2 months were revised downward by 100,000. So the S&P 500 surpasses 5,500. The Nasdaq gained 1%. Meta, Google, Apple on Friday were huge pushers to the upside, and we are seeing risk on in these markets. Come with me because we are going to review this economic data and then a lot of charts, a lot of technical analysis for you to be prepared for next week. Let me tell you, this week was surprisingly strong. Let's start with Monday ISM Manufacturing PMI, which came lower than expected. We were expecting from 48 to 49. We got 48.5, and this is a check in the right direction for the soft landing narrative and economy slowdown. On Tuesday, the day before the half holiday, on Wednesday, early close, and then Thursday, we got Fed Chair Jerome Powell's speech saying that the economy is going in the right direction. It's still strong, showing growth, but at the same time, pressure to the downside in inflation has continued, has restarted. And that's a dovish Jerome Powell, which caused the market to be really confident on the interest rate cut. We started to see the probability for a September cut going through 50 to 60, and now it's 72%. JOLTS job openings were, excuse me, 8 million coming from 7.9. We were expecting flat, a little bit of increase. And job quits showed that people is still not quitting, 3.4%. So another 2 checks in the right direction showing this softening a little bit of the labor market. On Wednesday, early close, the big data was ISM Services PMI again below 50. From 53.8, we were expecting 52, and we got a huge move to the downside in the most sticky part of inflation, services. That's another huge day. Thursday close and Friday, non-farm payrolls and unemployment rate showed that the labor market is slowing down, continuing slowing down. It's not all about NFP. Non-farm payrolls, we came to 106, coming down from 218. It's the unemployment rate which unexpectedly increased to 4.1%. And that's one of the things that I would like to review, because this unemployment report was quite surprising. And what is showing to us, it's soft landing kind of report. This does support the idea that the Fed will cut relatively soon. And you know that when markets price in cuts, they tend to spike. More than that, overall breadth should follow with us in this push to the upside, not only led by tech. Another thing that I would like to highlight is where these jobs were added: healthcare and government. This is the only concerning part, government, because when government, you can see here the increase in the unemployment rate, specifically for those with at least bachelor degrees, suggests a modest cooling of the labor market. So far, we don't see apocalyptic signs with the labor market, but investors should be worried when the labor market is supported by government payrolls. That's what we are seeing. we are cautious, but we are seeing signs of cooling down on the labor market and services and big data. So we are quite strong and at the same time cooling down. That's the golden sign that we were waiting for. As I was sharing, 72% for September interest rate cut, and then we will see if in November or December we have another one. Markets for the first one, it's already pricing in September. So that's a huge change led by basically consumer discretionary. This is the performance of the sectors in a 10-day time frame. You can see this is consumer discretionary, this is communications, this is big tech push. So all these three were leading the pack in a 10-day rotation. In the last 5 days, we can see this move, strong move in technology, strong move in consumer discretionary, and we have also up here communications and financials. Financials are good. At the same time, we are seeing the defensive sectors, XLP, XLU, and XLV down there. So this is a clear market of risk on right now. And if we move into the charts, this is the NQ continuous chart daily, we can see, let me just show you where we were during last week. Last week, we were basically here. I was telling you, be careful, 2 signs of reversal. We are seeing weakness. If we go below 19,800, we might see more downside. So what we saw, basically, it's no, this is not a market that wants to go down yet. So this was the range of last week. And basically, we had 1, 2, 3, and 4 days, because one day was holiday, 4 days straight up. Big squeeze with decent volume on Friday. And we have now, we have to change our approach right now. We don't usually do these kind of things for nothing. And I will be expecting this market to continue higher. We need to see quite technical. We have here a range of what is known as demand, and point of control is down here, which is good. We have volume supporting our structure, and then we have this little volume, which later on I will try to forecast some levels of that. So NQ is super strong, and on Friday we just went, despite the big news here, this was the news, we had this range, and that was all. Basically, once we tapped that, we started to open up, and that's why you have to really be patient. If you were trading this chop and not having patience, not managing your risk, saying, let's see if something opens up later, around after initial balance, after the first hour of trading, because the first hour of trading was this chop, and then the second hour was straight up on the second hour, on the third hour straight up, the fourth hour straight up. So we had a big, decent, and happy up day if we exercise patience. Apple did push this market with 2%, Microsoft 1.47, Tesla 2%, gapping, huge continuation to the upside. Google, huge day, look at this, strong, and Meta 5.87. Let's see the dailies, because all tech, it's basically pushing in a way in which you have to recognize a lot of strength. This is Apple. Look at this close. This is huge. Microsoft also pushing all-time highs. Tesla, look at this move. After the accumulation we had in a week, 25%. 25% in Tesla, because it's meeting expectations in deliveries, because it has catalysts in the sector, and the big November 2023 trend line with 5 points, it's right now breaking out. So this is a big deal for investors. Amazon 1.22 knocking on all-time highs. Google, huge push. Look at this candle. Nvidia is the one that is cooling down, but don't get me wrong, Nvidia will come again with a huge push. Right now, Nvidia investors are diversifying, are also taking profits, but Nvidia will come back. Meta, almost 6% on Friday. Look at this move. Huge move. So we are seeing XLK, as I said, really leading the push. XLF, it's also supporting, it's there still in range, but I mean, the Nasdaq is super, super strong. Before moving into forecast, let me just review what is also supporting the idea of risk on and equities strength. Dollar, it's basically falling off a cliff. It's weakening. The entire week has been weakening. The 1 hour, it's basically 1, 2, 3, and 4 days of, I don't know how much, but let me, it's 1%, 1.14%. I mean, this is good for equities. Dollar strength is not good for earnings. The 2-year yield, it's right now pushing below this range, showing 4.6 for the first time in more than 2 months. The 10-year long term, it's also seeing 3 days of absolutely sell-off. And I've been bringing back the inverted yield curve for some time here, for a week at least, telling you, be careful. This is the only thing that long term might have an issue here. The inverted yield curve again pushed to the upside, pushing this descending pattern, and we are slowly inverting to 2%. When the issues arise, right here, when we uninvert, we are going to see a lot of issues in the yields and in the prospects and expectations of long-term investment. This is when bulls have to be careful. Right now, the only thing to have in the back of your mind is, watch this. If we start to climb, then be careful with your long-term investments, because 100% of the time, when we uninvert, at some point into 6 to 9 months after, we see recessions. So forget about this right now. I think this is something to be worried, to be careful in the mid long term. But right now we are seeing huge strength. The last thing before moving into forecasts, breadth. How is breadth doing? It's not good. It's not improving. The only thing that we saw is 4 days of momentum. We came back from 30 to 45% of stocks to put above the 20-day moving average. This is showing momentum, but we are not seeing trend, and we are not seeing long-term money inflows into RSP or into overall breadth. So if we go back to the Russell, it's basically in the middle of the range. So there are two things. Overall breadth is still a little bit weak. We are being led by huge mega cap stocks in the technology sector, and overall breadth is not super engaging for long-term investors. But let me tell you, this is something that will happen. We are still in the middle. As you can see in this range, we are still coiling. When interest rates will have a cut, I think this is going to spike, because low income and weak business, small caps, weakness, business are the ones that will benefit the most with these lower interest rates, because they will tend to lend more and the business will have a huge push. What will happen with small caps is a big rip, most probably after summer, and technology will slow down because they are the other way around. So right now, let's focus on the short term. Let's focus on July because this is looking pretty good. Levels that I'm watching for next week. The first thing that I would like to point out is this candle. It's quite important. This is going to be our, let me just adjust the new all-time highs. We have new all-time highs there, and then we have the previous all-time highs was that one. This is the, I'm going to already adjust the weekly high and weekly low are there. So we have here a pivot. On the daily, we have still this daily open, this 1 hour is no longer valid. So let's just frame a little bit this. From the daily, we have the 1 hour. Remember when I told you I'm expecting this kind of move? Well, I never got the opportunity down here. That was a bummer. But we can still see a lot of decent areas. This is the big 1 hour candle. So from there, from the low to the high of this move, we need to really frame a little bit of pullback there. We have something in the 1 hour, not. I'm not considering this as a pullback. Maybe 500, but 500 is down here. So it's in the 50% retracement. I don't want to jump up here. I prefer to be cautious. I'm always trying to be cautious when we have a blow off top like this, because my risk will be managed down here. It won't be managed up here. So we have there that zone on the 30-minute chart. This is the choppiness that I don't like. Up here, we are seeing a lot of chop also. We have pretty efficient price action. We are not leaving behind any fair value gap, which we can use as a point of demand and support. On the 15-minute, we don't have either. We only have that, and I will just probably use that. Let me just do this pivot. So we have this pivot, we have an order block here. This is an order block, but I don't know if we might be able to use that. No, this is quite difficult. we have efficient price action. I call efficient because it's not leaving behind any gap, any inefficient, any imbalance. It's just filling everything. And that's one of the things that are super tricky for me, because right now I don't have any structure to lean on for a trade for next week. So the only thing that I'm going to do is see if I'm not going to trade this. Let me be clear. I'm just pointing this out because I want to see if market is super strong or not. How I do that? I put a zone of high. This is high risk zone. This is 1 hour, sorry. So I'm going to draw a high risk zone, and let's see if markets hold that. If they hold a high risk zone, means that there are a lot of buyers trying to jump into the stock, into the Nasdaq. So these two zones from here to here, okay, middle line out and right. So this is the zone that I would like to see if markets, if Nasdaq bounce off here, it will show me a lot of strength, because we are not in 50% in consequent encroachment. We are not in golden pocket. We are just up here. If we see markets Nasdaq bouncing off here, it means that there's a lot of demand. we are not even pulling back and buyers are already jumping in. So this is a test. This is not an area that I would like to buy. An area I would like to buy for sure is down here at this base. This was the huge candle of news, and I think that's a good area. The NFP candle, it's going to be quite interesting for us to really see a bounce. If we continue going lower to the previous all-time highs, I don't know if I'm going to buy. The NFP candle ends up at 20,496. So another sign of psychological level that I would like to buy. So most probably this is a good zone. Let me just check in the 30-minute if there's something. No, there's nothing. In the 5-minute, do we have? No, it was a quite choppy Friday due to Nvidia, but the rest were actually huge. So that's all. Tricky Friday. Let me say that. Tricky, difficult trading Friday, and we are not getting a lot of structure. In the daily, we are leaving behind a lot of imbalances that I would like for them to hold. So this, for example, this one, it's quite important. And what is the it's an alert. Okay, I got an alert. I move. So we have that. We have that. Yeah, we have these 2 days. So basically, let me just say that the current and below, and this is current and below. Yeah, so this is it. We have this strong level also on the daily. So let me just mark that. This is quite important. The previous pivot on all-time highs, it's at 20,375. It's not super useful because we already, as you can see, NFP candle already bounced off that. It was beautiful, and also during the overnight. But I mean, if markets do this, would you like to buy? I don't know about this, because this will already show you big rejection candle. So really difficult, and I'm doing this with you. I'm just not preparing this. I'm already seeing pretty difficult structure to have some kind of level for a continuation move. I'm bullish because after this you want to be bullish. I want a pullback, but the levels are not super good. The daily, it's the one that is showing more kind of traction. That would be good, but it would look pretty bad on slower time frames. For these guys, for the daily time frame guys, big investors, big bonds, hedge funds, this is going to be good. But for smaller day traders like us, doing like this, doing something like this is going to be pretty insane. So let's see what happens. We have to be patient. After new all-time highs, always be patient. Always try to be technical, because then short term will follow you. Don't trade in the 1 minute. Don't do your analysis in 1 minute, 5 minutes. Go from daily to 1 hour to try to find structure. Right now, we don't have structure in the golden or 50% retracement. We only have structure up here, which is the one that I show you that I'm not going to trade, but I want to have a test right here to see if markets bounce off here, if they basically form structure and then push. There will be a lot of buyers down here, and this is a zone of high risk. So if Nasdaq don't even pull back down here and already find buyers here and tests new all-time highs for 21,000 next week, is going to be insane. but most probably we are going to see a lot of profit taking, and let's see when and where do we hold. And I think that's all from my side. As always, if you found this video useful, please give it a like. I do these weekly recaps every Saturday for you to be prepared for next week. We go through all the economic data of the week and we review technical analysis on a lot of markets. I put a lot of efforts in these videos, so if you found them useful, please follow the channel, subscribe to the channel, because I also upload videos every single day from Monday through Friday for market forecasts, market updates, and market recaps. I appreciate your time as always. Thank you for the support. If you want to see something else in this channel, please let me know in the comments down below. I will try to adapt to that. You know my style, you know my way and my vision and approach to this market, but let me know your thoughts. Feedback is always welcome. As always, this is a weekend. Disconnect from trading. If you took the Friday off, enjoy the weekend. Enjoy the big long weekend, and remember that patience, discipline, and risk management are key for success. Stay safe, everyone, and see you on Monday.